All right, so I wanted to basically show how you can use a mountain of alpha to find ideas and give some insight into what the charts mean and how to read them. And one of the first places you can start is the screener. If you have a process for identifying which particular industries or countries that you want to find, you can obviously use the filters to narrow down your search. But what I'm going to do is a generalized search where I'm going to look for net delta as a percentage of float over 2%. What that means is that we net out the calls and the puts, and you get a certain value rather, and then you take that value and you divide it by the float of the equity. And if it's over 2%, that's going to tell you that there's a lot of calls, right? So we're looking for a lot of calls, and when there's a lot of calls and we expect the market to rally, then, well, you would expect the dealer to come in and start hedging. And so we're going to start with that one. There's also a negative one for puts. And I'm going to go to descriptive. I'm going to do over 1 billion, right? I don't want to trade all these micro caps and things like that. And I think I'm going to leave it at that. I'm going to turn off ETFs and I'm going to close it. And that's going to run the screener. You can see I've got over 260. And right now it's sorting by market cap. And what I'm going to do is I'm going to sort it by the delta as a percentage of float. So you can see that the equities that are over $1 billion that aren't ETFs, cores has the highest delta as a percentage of float. And we could probably see that. It's a little hard, maybe. There it is. There's cores. I click that. And you can configure these columns here when you click on it by clicking on this. And, you could put other columns here if you want. IV skew rank, growth metrics, things like that. But you can see here, delta as a percentage of float, it's the triangle. And it's 35.27%. It's kind of crazy. That's really high. I don't think I've ever seen numbers this high before. But very, 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 very high. And what that will typically indicate is if there's any like really positive news or a suppression of vol, a really big rally in the market, you would expect this to increase in price drastically as the dealer has to hedge. And if they're hedging, well, there's not enough float to compensate for all of the delta that they have to hedge. Now, the inverse can also be true. If you expect a lot of volatility to come into the market, this is going to be sold like crazy. So if you go back to the pinch chart, we're on open interest. This is the strike view over here. And we're just looking at strikes, which is each expiration is broken down by equal weighting. So they're all equally weighted here. And the strongest strikes are based on opacity, right? So you could see it's a 20, 22, 25, and 30. And to visualize that a little better, you can go to the bars chart here, this bar chart, and you could see them here, 20, 22, 25, 30, see? And so all those are showing up as really strong overhead calls. So if volatility is expected to come into the market, well, all of these are resistance. But if a catalyst comes in, like earnings, and it's very good, and you get liquidity issues, this is going to squeeze like crazy because the dealer has to hedge a tremendous amount of underlying in order to hedge their position. But we could see here that how price has reacted around this $15 here, right? Even in the past, it's kind of hovering around that 15. It bounced off of this 14, which was all puts because it's red. And you can right click, go to settings, and you could change the call color. And I'll change it to like a pink. Maybe you have, people who are colorblind. So I don't know what colors you would use for colorblind. Yellow? Is that I don't know. I'll just go back to the blue and the red and I'll just indicate which are what, right? So what do we do here, right? Is it a trade? Is it not a trade? Well, really you want to be buying when it's 14 or below. And the reason is because all the open interest is above, right? So it's kind of here nor there. It's kind of coin flippy, right? And so I'll just keep scrolling down. And I just want you to make note of where all of the strong highlights are. Oh, it's kind of a soft one there. Here, okay? And what we're looking for are extremes. And the extremes that we're looking for is when you get a pullback here, right? Then we want to write it higher, okay? So we're looking for extremes down here if we're bullish. And if we're bearish, we're looking for kind of like resistance levels up here, anticipating that volatility in the market's going to come in and help push the price of equities down, especially as the implied volatility of puts increases. So I'm going to keep scrolling down. And so you could see like these three levels, it's not very interesting. Here for IREN, you could see there's a lot of calls overhead, but it's sitting in the center of 60 bucks and 30 bucks, right in the center. If you click bars, you could see you have a distribution over here and a distribution down here, and it's kind of tilted to the right of the center of both distributions. So it's here nor there. And you don't really want to make trades that are coin flippy. So this one, if you just did like a distribution, I'm not going to draw it perfect. Well, it's not perfect. But if you did something like this, it's coin flippy. It could go down, it can go up, right? We're not looking for coin flip scenarios. And most often than not, when you're getting this correction type thing, you're going to see this coin flippiness and the open interest profiles. Now, Delta might say something different, but I'm just going through open interest right now just to get a feel of what's going on. So ASTS, right? And a lot of these names we're going through are names that appear in social media, that appear in a lot of meme type stocks, that appear in the high performers, and they appear that way because there's a lot of delta that needs hedged. But you could see recently it rejected the 91 pin because a lot of volatility came into the market. And then it down here was when volatility peaked. And when volatility peaked and came down on the overall market, you got re-hedging of the equity, right? So when we're looking at these names, you could see that if we were going to buy, it would have been down here and down here. And so we're kind of like out of the trade right now. You wouldn't be able to, you know, it's too coin flippy, at least for me, right? But it is targeting this 80 and this 90. So things like this, where you could see it's actually kind of thin. There's not a lot of open interest here, and they're just prominent at 15 and 20. I usually just avoid names like these. You can see in the past that um, it's just kind of ebb and flowed. It's just ebb and flowing around this 16, and I just kind of, sorry, the 15, and I just kind of avoid those names. Uh, you're looking for you're looking for extremes. So here, what do you think this looks like? Well, you got a 20 and you got an 11, but it's sitting right in between. Now, if volatility is going to continue to suppressed, come a little bit up, suppressed, come up and a little bit suppressed in the overall market, you expect this to just kind of push higher and higher and higher. It's just going to chop, go up, go down, go up, go down, go up, down, go up, down. But once it reaches 20, you may have some type of issues when volatility is really suppressed in the overall market, and then you get a big event, and then that's going to become resistance, and then it's going to sell off. So, but it's here nor there, so you can't really make a judgment. Same thing with Cypher, right? It's kind of like here nor there. 25 is a big one, but there's no real significant area other than $8. So you're kind of just going to be waiting a lot. Bitmine, there's this big one at 50 or 60, sorry, but it doesn't mean it gets there, right? There's a lot of puts down here at 25. So if volatility came back into the market down here, then we would think about maybe buying if we're bullish on Bitcoin or whatever they do, right? Bitcoin miner. Okay, here, what about here? Well, 50 bucks and 30 bucks, right? 30 and 50. So the real buy here is anything below 30. And this is the idea that if you have a process and you're bullish on something, you want to buy a pullback, right? And the pullback here to buy is 30. And you're going to target 50. but right now it's sitting in the center, here nor there. So you're pretty much out of this trade right now, right? Okay, very thin. I just avoid very thin names. There's just not much there. Canadian Solar. Well, 30 bucks and 20 bucks. What do you know? Look at this. It came up into the 30 here. Volatility came into the market, went down to this 20, rallied back up to 30, and now it looks like it's coming back down to 20. And that's the range. This is the range of the equity. And that'll persist until, so I'm going to do this concentration mode. And what concentration mode is going to do, it's going to find the largest call and the largest put, and it's going to expand that expiration to match how much open interest is there. So here I can see all the calls are at 20 and 30, and it's out till January, and then out till January 28. Wow, that's interesting, right? That's way out there. That's 774 days. That's crazy, right? So as the price comes down here, if it does, right, you would expect that if the price comes down here, anything under here, this expiration here, it'll consolidate, but it'll push higher. It'll probably resistance push higher. And if volatility compresses, it'll push all the way back up to 30, right? So you know, just by looking at this, where some of your levels are, right? Let's go back to the strike mode. So TMC. TMC is one I'm in. This is a trade that I'm in. I bought a December 5th call vertical, and then I bought a January call vertical. Oh, sorry, excuse me. December, December 5th call vertical and a January 16th call vertical. I think it's on the 16th on January, if I recall. And what I did is volatility came into the market, and I saw this big $5 pin, and then right in here, in this area here, you had peak volatility. And so I can tell you that. If I just go to MOA, and I do EMC, and I do VIX. And when I say volatility, I'm talking about overall general volatility in the market, right? I'm going to go 3 months just so I could zoom in here. So here, you could see when volatility spiked up here, there was some areas where volatility compressed from there. And this is where I placed the trades, right in here. So there's a big pin, increased vol, and so when I expected volatility to compress, I expected TMC to rally as dealers had to buy back all of their hedges. And so right now you can see it's resisting at 8, right? And so that December 5th call vertical that I had, the 557.50s did 752%, right? But I closed it around 458. But if I held it, it would have been a little better. But 458% in a week, I'll take it. I don't care. I'm collecting some profits, right? Now, the longer term one, I'm targeting 10 bucks because that's where all the open interest is, right? But you can see we're getting a little bit of resistance so far, not much, but that's a great trade. And that one looks really nice because it's just all calls. It's very definitive at 5 bucks, and it's very definitive at $10. That's a really big range. And if you're lucky during one of these events, like an earnings event, if it's really good, you could get a squeeze up to 15. That's where you make a lot of money. But this one is my highest conviction trade, is TMC, just because of how the profiles look. Let's go down here. Oh, sorry, it's volatility. All right, next one. Okay, therapeutics, biotech. I always ignore biotech. I don't know anything about it. It's way too volatile. Uh, it respects pins, but sometimes it blows through them, and I don't know. It's just way too unknown for me to venture into those. So I just kind of ignore the biotech scene. I usually just stick with tech. So APLD, well, some resistance here at 40, a little bit here at 35, and a big one at 30, right? So my anticipation here would be that if the market rallies up into 7,000 into the next year, and we start getting unwinds through March, a little bit of choppiness through March, after March OPEX, and then we start getting selling, well, that's either going to act as support or resistance, right? So it just depends on your view of the overall market and how things react. But you kind of missed this trade already, right? Okay, First Solar. Well, First Solar has a really big ass target at 300. You can see that. And a really big tail at 410. Okay. And that kind of goes into what we talked about with the energy trade, right? And being long energy. So FSLR seems like a trade where you could target 300, but hope for this 410, right? But have we missed it? Have we not missed it? Well, it's trending, right? It survived a volatility event, right, in the market, but it looks like a really big buy around 200 that I'm seeing. It's kind of in the middle. It's here nor there. And I'm not saying that it's not going to work. I'm just saying if you wait for the market to come to you, the probability of you being right increases. Right? Now, if I do it here, it's 50-50. If I do it here, depending on the circumstances, it's going to be better than 50-50, right? Most stocks ebb and flow between these pins. I'll give you another example. Look at Reddit. Reddit is a great example of this. So here you could see two very definitive pins. I'm going to do max. And you can see that we rallied up in this 220. We came down when that was the tariff news from the president. Volatility was escalated, went to like 60 or something, right? And that was peak volatility. And then it was below this long-term 115 pin. And when volatility suppressed, it eventually pushed way through the top end of the pin at 260. That's a crazy trade right there. But then, since then, it's been bobbing and weaving on this large strike here. Now, there's a lot of open interest up here. There's a lot of calls up there. And if it's the case that we're not going to get any significant volatility event in the next 6 months, well, you can bet that it's going to chop higher. Then when volatility comes, it's going to liquidate, right? And it's going to chug it. It's going to try to chug itself along, but this is going to act as some, I don't know, what would you call it, like a force field, if you will. And if you get a real large volatility event, you're going back down to 110. So you get trapped between these two areas. Another one is Oklo. That was very supportive. Is that back here? And go back in time. So here you see this 150 and how the price just blew through that. Usually when you blow through those big pins there, the target is this 150 and you want to target this 95. You see this 95 down here? Now there's a little bit of something here at 100, right? So 195 would be a target if you expect volatility to come in. And that's what happened. Volatility came into the market, and I'm going to fast forward in time 2 months, and look at that. It went to 95. See, we're at 95. And now we're at 100. So that, and look, even here it rallied back into that 150, and they came all the way back down into that 95, 100 area. See? So it's very important to understand these ranges. They're very, very important. Okay, let's go down. Okay, this one, Win. And I had a trade on Win back here as a put. I think I put it on here. I can't really remember the exact date. So I put a trade on Win here. Well, I saw this resistance area and I want to target something down here. Economy's doing pretty bad. But over time, as this played out, I was watching price action. It's very important, right? How is it going to react? Well, it pushed down and it's hovering and chopping around this 120 and it's not disappearing. It goes up, it comes down, but you see like it's below and then it rallied above. It's below and it rallied above. It's below and it rallied above. You see that? It's kind of hard to see. You have to kind of zoom in, but you could see 3 different days. Maybe I go on TradingView. Sorry if my keyboard's loud. I'll fix that eventually. And Here are the days right here. 1, 2, 3. So you see there's buying below that pin, or when you hit it, there's rallies. See? So that's a very significant zone that the dealer is trying to defend. And so I'm going to go forward in time, and we pushed higher away from that 120. And then here's, look, this 110 came in. And here, I'm going to demonstrate this on a new screen and how I close the trade by watching price action. Okay, here's when I closed it either the 19th or the 8th. I can't remember. It's like one of those 2 days. Here. Okay. So you see how the overall market volatility went from 15 all the way to 26, but when it fell into its support area, right? Now, if you had anticipation here that volatility was going to fall and compress, which I did, well, this isn't going to go any lower. It's going to go higher. There's a bunch of calls up here, right? So that's where I closed the trade. I think it was back here, though. That's where I closed the trade. And, well, let's go forward in time. I'm hitting M on my keyboard. M goes forward 1 month in the snapshot. That's what I'm hitting. And look here. Volatility compressed, and it rallied above back to 130. And now you're starting to see more open interest come in for Win, right? More of it came in. So back here, you weren't seeing that because it wasn't as strong. See, it's not as strong as this pin. But when you move forward in time, options change hands. And now there's a bunch of calls overhead. So your support here is 121 and 110, and you're targeting this upper distribution. So it's a long. So Win looks like a long, right? And it's a case too. You have to remember that because there's a lot of calls here, and if volatility decides to go on a rampage up to 30, all of this becomes resistance, and it becomes feel for the dealer to be a seller in the stock. So it's a double-edged sword. You have to remember that, okay? But if you anticipate volatility just to be muted and suppressed, muted and suppressed, muted and suppressed, this thing is just going to chug along. Maybe if it's suppressed enough into February and it gets good results, this thing could squeeze like crazy. So you just have to be cognizant of the price action relative to where the overall market implied volatility is. It's very important in your trade. But look, it just went sideways, right? And I'm a directional trader, and I was able to get out with like a 20% loss rather than a 100% loss. And it's very important that you know how to cut losers quickly, but then let your winners run massively. And that's how you outperform. Even if you even if you just do 50-50 where you win half of them and win and lose half of them, well, if you're doing 300, 400% gains on your winners and you're only losing 20% on your losers, you're going to make a ton of money, right? So it's okay. Losing is okay. It's a part of the business. And people just have to get used to that. But let me go forward let me go forward in time. All right. So let's go down here. Okay, well, Dave, well, that looks pretty boring to me. Um, really strong at 10, really strong at 170. Nothing going on. Very thin trading, just avoid it. Okay, USA Rare Earths. Now, it's 1.67 billion. That's a pretty small company in the scheme of things, but it's related to rare earths. It does have a lot of calls overhead. And what you really want to be a buyer of is the 10s and 11s and maybe the 13s. So you can see here, like you could see the price action down here. You see how there's like a hammer, there's a star, there's a hammer, and then it just rallied. And that was like peak volatility. That's when volatility peaked. And it had good price action when volatility collapsed, but not so much now, right? Not much going on. That's typical, right? You don't see much, then you get a squeeze. So here nor there, but I'd be interested in down here. That's why it's on my watch list. You just click this and you get it on your watch list. So I'll watch it down here and then take longer term trades, maybe targeting 20, but hoping for an upward squeeze higher. Okay, LQDA, Liquidia Corporation, biotech. I just avoid biotech. It's just not my thing. I don't know anything about it. Communication equipment. That's okay to trade. Ondas. Ondas has been a favorite of social media guys. Look, peak volatility right here. Collapse in volatility. Really nice move. It went from 5 to 9 in a month or so, something like that. Pretty good. So you have resistance here at 10, kind of support here at 650. Well, it's not really something to trade. Not very interesting. Open door, same thing. Look, you have a big $10 call wall. You have some support here at 650 and a little bit down here at 450, right? And you can see that price has been reacting to this 650 here. See? It bought below it, it bought below it, it bought, right? But it's also selling on the upper calls, selling on the upper calls, right? So you have to be cognizant of that as well, right? So right now it's here nor there. Okay, PAX. Well, it's very thin, really deep in the money calls, and doesn't really look like a trade. Oklo. Well, there's this really large 200 call, and there's a lot of puts down here, and we're kind of in no man's land. So I would kind of expect this to fade down into this 65-80 zone, somewhere down here. And at that time, if the distribution looks fine and it looks okay, and volatility came in, and now it's peak vol, and vol is going to suppress, maybe that'll be a trade to the upside. This is what is this, like solo nuclear energy? I think it is independent nuclear energy. I can't remember. I think that's what it is. So maybe that's an idea. So I got it on my watch list. CleanSpark. Is CleanSpark Bitcoin, I think? I usually just I don't like trading Bitcoin stuff, but you can see support at 9, maybe some resistance at 15, another pig pin at 20 bucks, another one at 25. So if you're interested in this, maybe you wait for 9, like down here, you see, $9, boom, right to 15. 1, 2, 3, almost in a week. And right, what is that? 50% in a week? That's crazy. Lemonade, really popular name. So this looks like there's a lot of resistance up here at 90. So this will probably just chug itself all the way up into the 90 zone. It doesn't really look like a trade. You're not going to make much money in options doing that. Sophie. Well, so far on Sophie, it's been selling the 30s. See? Selling the 30, selling the 30, selling the 30, selling the 30, selling the 30. There's been a lot of selling at 30. And if Sophie is not able to get above 30 before you get um, volatility, one second. Oh, sorry, didn't mean to interrupt there. Before, if volatility suppresses, you can see the suppression of vol here, increase in vol here, increase in vol here. Maybe it's going up again. Who knows, right? But if you get this suppression into the end of the year in volatility, and Sophie is not above 30, well, you can expect that volatility is going to come in, and then all of this will act as resistance. All these calls will act as resistance, and you'll push lower into these support levels down here. So you do have to be aware of where you are in the volatility cycle relative to your expectations of how the distributions look on the graph. Okay, what do you think on this one? Up FinTech Holding. Yeah, exactly. Not much going on. There is a lot of calls up here. They're kind of thin, but you know, I wouldn't trade it. Could probably make money on it, but it looks thin to me. I wouldn't trade it. Okay, Nebius. I had Nebius down here. I had to sell here because I had a greedy 1-to-1 diagonal trade on. And if I had a 2-to-1, I could have rode it much higher, but live and learn. Okay, so it looks like we bounced at this 85. See that? There's a put wall. But we're kind of here nor there, right? I'd probably want to wait till 85. Really big one at 60. Really big one at 60. So if volatility comes back into the market and starts pushing this down and we come into 60, that's a really big trade all the way up to 150. And we can kind of confirm. Let's go to concentration and see where it is. Okay, it's kind of here nor there. So this one here, this 150, is in 10 days. That's not going to happen. Unless there's maybe some news or something. It's probably just not going to happen. It's probably going to get resistance, if anything, at 120. And so that's going to go away. This is going to go away. That's going to go away. And you have a really big in the money 45 strike, right? That hasn't really moved at all. No one coming out of that. And there's another one here at 60, but you can see some glimmer of this 140 that's out to January 28. And so I have it on my watch list here, and I'm just going to wait until we come down into these levels to see what the distribution structure looks like and to ensure that at that time that volatility is elevated, right? Because if it's elevated, we would expect it to be down here. And if it's down here while volatility is elevated, let's take a trade to the upside, right? That's part of the AI data center build out trade. Wow, look at path. What do you know? Bounced on 13, what is this? 1250 and rallied right to 20. Why do you think that is? Well, volatility compressed, then they had a news event, and then it squeezed. Wow, what do you know? But I wouldn't trade this. I'm bullish technology, I'm bullish infrastructure, and it's right at a resistance level. You already missed a trade, right? It went from 1250 to 20. Too late. You're going to have infinite amount of opportunities on this stuff. Okay, GME. Now, this does look like a trade, right? It looks like a trade I would do. The problem is that GME has been sold forever. Look at it's just selling, selling, selling. Okay, maybe it rallies into here and sells. Maybe it's a trade, right? But I just kind of avoid the old school meme names. It's just something I do. I don't like AMC and things like that. I just kind of avoid those. You can make money elsewhere. Unity, look at that. We're in some put delta. That was peak volatility. Volatility came down and you started rallying up into these calls. Looks like there's a big target at 65 here, right? So if volatility continues to do what it's doing, this is just going to chop. It's going to ping pong, push up, ping pong, and then maybe earnings in February will push it to 65. Right? But it's here nor there. I would have wanted to buy it down here, right? I like buying on these pullbacks here and targeting certain things. Okay, Hood. Well, 150, 70. It's a lot of overhead calls. So if volatility remains suppressed, well, you'll just get chugging. All else being equal, like you don't get some news event or whatever the case may be. I'm just saying in the course of normal events, right? But man, I'd really love to buy it at 70. I don't think I would want a short Hood. It could be an idea if you expect consumer sentiment and a recession and all sorts of things like this. Well, maybe when you get an incredibly suppressed vol and Robinhood is way up in here, these levels up here, then maybe you can take a counter trend trade and try to look for some pullbacks. But those are really difficult to do. More often than not, they don't work. Okay, uranium, right? All this energy talk. Well, the big buy here is at 10 bucks, right? And then you probably want to target this 30. And let's see the concentration. Let's see where it is. Okay, so you can see that the put is at January 15th. That's fantastic. So if this long-term call is going to act as resistance and it's going to push down into this 10, look at this. This is 774 days. This is also 774 days. So what we want to do is we want to buy below 10. That's why I got on the watch list. If this comes down below 10 and the option profile still looks the same and volatility is elevated, because that's what we would expect, right? Then it would be a we're going to go for a bigger trend to the upside because we're bullish this stuff. But we're still waiting. Now, this could be an actual opportunity to buy, of course, right? Because you have long-term calls, and you could squeeze. But the real buy is at $10. And I'm okay being patient. I'm a patient person. We're not we don't have to force ourselves to trade, right? Okay, same thing here, Lyft. I had a Lyft long, which I closed because Uber had bad results. I was targeting 25, went to 25 and it reversed. Okay, fine, perfect, great. I got out of the trade and it's done nothing since then. It's gone sideways, right? So sometimes you have to take indication from other equities and see how they're reporting, how they're reacting to certain events in the economy. And that can give you a hint into cutting losses quickly, where you don't sit in the trade long enough to have theta just kick you in the balls, right? And that's what would have happened here, right? So resistance at 25. There's some really big support at 12. I don't know if it goes there. That's kind of a ways away, but kind of here nor there. Okay, Navitas, NVTS. It's another one I had on my watch list. Kind of resistance here at $10, right? And so anything below the $7.50, $7, you could see there's like buying here, fade, buying here, right? So it's just going to ping pong between these levels, maybe push a little bit lower if there's a lot of volatility, and then we could be off to the races. There's a lot of calls up there, right? This is the AI trade, semiconductors. So that's another trade I'm waiting for. Bloom Energy has been a killer trade. It's kind of here nor there now. Big buys at 55, targeting 150. It's here nor there, right? You just can't really construct trades like that. EcoStar, kind of avoid that. There's not much going on there. It's almost like Win, right? Win had that big call, and here's that 60. And it's just kind of hovering around it, right? I don't expect too much out of that. Centrus Energy, uranium, another uranium. This looks better than UUU, to be honest. So here's another one. Look, it's down here at 170. So if we do get a push down to this 170, and maybe earnings will take it there, you can see February, maybe earnings could take it there. And if we're down here, there's all these long-term calls. There's long-term call support here. And so then we could target 340. That's a big move, right? So we're just waiting for the right moment to buy this quote unquote pullback. It's not really a pullback. It's a pretty big move, but we're trying to get in at the right opportunity, like down here, and ride that all the way up. Right, that went from 170 to 450. That's a crazy trade, and it did it in like a month and a half, 2 months. That's wild. That would have been a huge trade. Seabridge Gold. So another part of the process is that we think inflation expectations are too high, and there's actually a deflationary force. And if that's the case, what we want to do is when volatility is suppressed, which it has been, it's been rallying, and then we want to anticipate volatility coming into the market. And that volatility, these will act as resistance, 30 and 35, and then we'll target something down here at 20. So you can take the opposite view, right? You can look for support and resistance. Okay, Big Bear AI. Well, it's been doing nothing. It's been consolidating around 7 with some variation, right? So it's gone from like 5 to 9 variation. It's like a $2 variation on either side. So kind of here nor there. I just kind of avoid it. Big one at 10. Maybe it goes there, but not something I would trade. ALB, here nor there. Looks like the target here is at 135. Maybe something at 170. But it's trending. You know, maybe that's your cup of tea. But I like looking for very extremes in positionings. Hey, there's Reddit. Look at that. See? But look at all that. Look at all those calls, man. I don't know if like I would trade down to that 120. There's just way too much calls in this. Yeah, there's way too much overhead calls in this. 12,000 at 280. That's got to be a ton of delta sitting there. Yeah, this is all strong delta. Yeah. So I know for a fact that those are long term. There's a long term spread in this. Yeah, see? This long term spread. January 27. So it's a leap. And that's been there forever. So maybe it's the case it's just going to hover around 220, and maybe earnings can either escalate it to the upside or downside. But if all of this was gone, I would trade to the downside. But the fact that it's not is a little sus to be trading that spread, right? There's just so much calls up there. MongoDB. Well, this looks like one of those things where if you have suppressed volatility and it rallies into this, all these calls, that's a lot of hedging. And then if volatility kicks off, it would push downwards, and this would act as resistance, this 430. And there's some really big, interest down here at 210. So that's a pretty big range. But you would have to anticipate and actually a pretty dramatic volatility event in the market for you to get something like that. So that's why you need a process other than just looking at these charts. But as I'm scanning through, you could see things that make sense and make don't. And what you're looking for is you're looking for equities that, if you're bullish, are sitting on something like this, like down here at 11, where you can target the 20s. And you always got to make sure that the concentration is set up correctly. So here, this is January. So if this fades down here into January, this is going to disappear. And then the structure is going to look different. So you got to make sure that there's a long-term support there for this 110, which it's not. It's only a month away. So a lot of you see like this one, this will probably just consolidate around 15 and not do much. That's a silver miner, right? Not much going on there. Software infrastructure to 1.89 billion market cap. Okay, so we're kind of in some support here, right? There's overhead calls up here. That's kind of good. Let's look at concentration. It's kind of a mixed bag. Yeah, a bit of a mixed bag. This is going to disappear in January, which, it's kind of too short of a time here. But when that's gone, there's something at 20. This is for February. So we'll just have to check that later if we're interested in, right? So I'm kind of like avoiding that name because it's only 1 month away, right? It's not that far away. Biotech, I just skipped those. Looks like it's going to 60. Maybe they have some report coming up. I don't know. I don't play those. Celsius Holdings, beverages, non-alcoholic. Well, it looks like there's this 60 pin, but something of note, they had positive earnings and the stock fell. And that was still there, right? Let's go back and see if it's still there. I'm clicking on the bar to go back in time. Okay, that strong bar is still there. They had earnings and it went down. There's a lot of puts there. In fact, it went down to the next area down here, this 37.50. I'm going forward in time. There we go. That took a while. That was weird. Look, look, 30. Oh, it went to 40. Sorry. Didn't go 37.50, went to 40. Oh, well, that's still a big move. But usually on these like positive earnings, if they get positive earnings and they go down, yeah, it's kind of sus. You got to be careful with those. But it looks okay. There's a target at 60, but that 60 existed before earnings. Upstart, dog shit company, probably have resistance at 50. Kind of here nor there in Rivian. Baidu, really big target 150. Baidu, I bought down here and I sold down here. I did buy put protection down here. At the time, I didn't have this type of visual to see the 150, but I would have sold at the 150. It's obvious it's resistance, right? But here nor there. Looks like the big buy is at 75. I don't know. I just avoid it. It's China. Biotech, skip. Here nor there, skip. MP Materials, there you go, industrial. So big buy at 50. So anything below 50, we can target 75, maybe hoping for 100. So that's good. So I'll put that on the watch list. I'll just click that. See that? Okay, so I think you're getting the idea, right? Now, another thing to check here is, oh, that's interesting. Carvana. Look at that. I think this is breaking an all-time highs, if I recall. Yeah, it broke all-time highs. And if I go back over here, what you would expect here is if volatility remains suppressed in the VIX down here, we suppress into this here, and then you're going to expect volatile events coming in. Well, all of this will act as resistance and forced selling by the dealer. But if price action holds up here and you just don't get a quick reversal, like over here, see, like that, or something like Cisco. Oh, I have two of these up. I'm just trying to show you the pattern. Was it Cisco? No, what am I thinking of? Uh, did they have a split? Can't remember. Who am I thinking of? Um, did Roblox do that? Man, I'm trying to think of the ticker. Sorry, guys and gals. Ah, Roblox. So you see how it pushed up higher and they just had this complete reversal and it chopped sideways and went down. And so it's important to kind of watch price action after this. If price action just kind of stays elevated like this, then it's the dealer hedging. They're looking for hedges. And you're going to get like an upward force squeeze probably towards the end of the year, right? But if you're watching this price action and when it rallies and sells and keeps pushing down like this, the dealer is unwinding all of these hedges, probably the ones up front mostly. And so it's very important to watch price action and these types of ideas, but it looks like it's really going to go to 250 if there's volatility. And so that can be like a cons a consumer cyclical short, right? Because they're selling automobiles, right? At elevated, crazy interest rates. I don't know if you go on their website, their interest rates are like 11% or something stupid. So that looks interesting as a short, but you have to watch price action because if price action is showing increased upward movement, it's just going to sit there for quite a while, just pushing up, pushing up, pushing up, pushing up, pushing up, and you're just going to sit there against the trend. So that one's going to take some effort to time and do correctly, but you kind of get the idea. Okay, Sphere. Well, there's not much downside. Support is 70. If you try to construct a trade on here, you probably won't get a really good deal on that. Kind of same thing. So you kind of get the idea, and you could kind of just like skim through these and kind of you'll get used to eyeballing things that make sense and don't make sense, and you get used to it over time. Now, another thing to watch is okay, there you go. Look, biotech. That's why I don't get involved in biotech. Okay, like it's just mental. There's no way to predict this type of stuff. So another thing I wanted to point out, I don't know a good example off the top of my head, so I'll probably just have to ruminate and find some ideas. Okay, delta. So now this is the delta view. Instead of open interest, it's showing delta. And you can see as support, delta is really good for support, maybe resistance. And you could see that you can confirm that this $5 has an incredible amount of delta. If you go to bars, you could probably see it. Here, see? 13.4 million in delta. And it's all call delta below, which would indicate that if there's more volatility in the market, the price would fall. But if there's less volatility, they have to buy back all of these hedges that they sold. And that's what happened. This was the peak of volatility right here. So you can see that I switched to delta, and you see this support, and we had a volatility event, which now we're peak volatility. It's starting to come down. That's a signal, right? Volatility's coming down. We go to open interest, and it's all calls. Look at that, beautiful. All equally distributed calls across all the strikes. See that? And then we'll just go forward today, 1 month, or not 1 month, maybe 2 weeks. Well, it rallied $5 to $8. Volatility compressed. See? So if your viewpoint is that volatility just remains compressed and compressed and compressed and compressed, well, the names that are heavy call deltas would just incrementally rise slowly. They'll just slowly chop up. And if your view is that you have this suppression of volatility, I use the market's volatility as a proxy. If you have this suppression of volatility over a few months, it's not going lower, and then now you're higher, it's not going down anymore, and you get a volatile event. Well, you want to be short names that have a tremendous amount of call delta, right? So that would be something like IREN at the time, right? IREN, here's the first volatility movement, there's the compression, and there's the second movement of vol. And what's interesting, it hasn't done anything since the suppression of vol. Look at this. You see this compression of vol? It hasn't done anything. And that's kind of a warning sign that all of these calls up here, their volatility is coming down and down and down and down. And when the volatility is coming down, the dealer is becoming a forced seller. So anytime this rallies, they sell. Anytime they rally, it sells. Anytime it rallies, they sell. And it's suppressing and causing an underperformance relative to other equities like TMC or Path or, well, you know, whatever names we saw. But what you're really looking for is, look at this. So you see this increase in volatility here, and the overall market as a proxy went to 60, and then you had this compression of vol all the way down here into the 15s. Oops, sorry. Into the 15s. And that compression of vol created a fantastic squeeze or buying opportunity in IREN. Well, that's in the IREN is a data center, I believe. I think they were financial, and then they switched to data center. I think that's what happened to them. But volatility came in. Well, it went from 70 to 45. That's a big haircut, right? So that's what I'm saying. If you're up here, let's go back. Let's go 6 months. Look at, you see this big pin here at 70? Well, if you anticipate volatility to come in, that's going to be resistance. Even though there's a ton of calls overhead, all of these is forced selling by the dealer. The dealer's hedging this, they're hedging this, they're hedging this, they're hedging everything. And when volatility comes in and the put volatility increases, it offsets the hedges of their calls to where they have to start selling, right? And so then you get your volatility event, you get your selling off on the stock, that was resistance, and then you get the compression of vol, but it hasn't moved yet. So I would be very, very sus about buying this name up into the 60s. I would actually anticipate that if volatility does suppression, that you're going to get another volatility event and it's going to drive it down to 30, right? So you can correlate how the overall market structure and volatility looks like, and you can anticipate it with certain events and things like this. And you can correlate that with resistance or support in the options market. So I hope that helps to find ideas. And remember, I'm sorting by delta as a percentage of float. You can also do the same on the put side of the equation, where you can look at the most puts, the most delta. So this is the inverse, right? This is going to be the equities in the opposite view. So you have a lot of puts and little calls kind of things. And these are going to generally be trending downwards, right? They're going to be trending downwards. They're going to be trending downwards. They're going to be trending downwards. So instead of up, they're trending down. That's because of the delta, how the dealer has to hedge. And these types of trades, the reversal on those only really come when you have a very large volatility spike and you know the fundamentals of the company are okay. Like they're just like Figma or something, right? Like let's look at Figma. That's something I want to buy eventually, where it's just trending down. Okay. There's this big 35 here. See this 35? There's a lot of overhead calls here at 70 all the way to 100. Fantastic, right? But volatility has been compressing. Let's zoom in a little bit more because it's a new company. Volatility has been suppressing, but Figma hasn't been doing shit. It's just staying at 35, right? Let's look at volatility. Look at suppression of vol, nothing, no movement. And you just got to be cognizant of that because the price is most likely going to go lower if volatility starts spiking up again, right? And at some point, this is going to be a buy, right? And you just have to time those cycles. And you could wait. So I turned it to delta, and I could see there's something at 30. So I'm going to wait below 30, wherever it happens. Like if you get vol compressing and then you get a volatility spike, maybe it's March of next year. Who knows, right? But when it's below 30, and I'm looking at the option structure and I still have all my calls, then what I'm going to do is I'm going to wait for delta to start flipping. Reddit is a good example of this again. Let's go to Reddit. Then I'm going to go back in time to show you the exact dynamic that I'm talking about. So I'm going to go back in time to the peak vol. This is peak vol right here. The 4th, April 9th. Here, look. A big volatility movement. Then you see volatility compressing here. And when it does that, more likely than not, the cycle's done. That's just how volatility works. Okay, so here I see a really big pin here at 115 across the whole spectrum. I go to concentration, and it's long term. Look at that, 646 days. And there's one up here as well, 60,000 up there, 65,000 down here. See? Perfect. This is picture perfect. This is a picture perfect trade. And so what you want to do is you just want to be patient. You want to wait. You don't want to, you want to wait for things to turn. Let me go to delta. Here we go. So we're waiting, and we're getting compression of vol. See, you see all this, it's hard to see. Okay, see, we're still waiting, right? Even though volatility is compressing, we're still waiting, still waiting. There's a lot of put delta. See, it's all red. It's kind of hard to see because there's so much damn strikes on this equity. Even if I zoom, it's not going to really help. Okay, I'm going to step forward in time, step forward in time, step forward in time. I'm just stepping forward today. But look at here. Like, you can see that the delta at the money is now all calls. It used to be all puts back here. You can kind of see it over there. Now it's all calls. So now you're starting to get this indication that things are starting to flip. So I'm going forward in time. Oh, this 1 month thing is kind of strange. There we go, 1 month in time. Look at this. You see how it's all calls right there? It was all puts, now it's all calls. And that's fantastic. And you still have these distributions sitting there. Volatility has now fully compressed. And now you're off to the races. I'm going to step forward a month. Step forward a month. Look at, we were down here. And now we're all the way up to where the 240 was. See? So you're patient. You're not going to miss a trade. I want you to remember that. You're not going to miss a trade. Okay? So when you have an idea, it's okay to wait. And wait to see how the equity is reacting to the compression of vol. And here, it rallied, but it's hovering around the put. Right? It's hovering around the put. And then all of a sudden you start seeing all that delta show up. You get a breakout, and that's your confirmation. Right? And you go from 120 to 260, whatever it went to. Let's go forward another month. Yeah, 270. Went to 270. But since then, look, it's just been consolidating around this 220. See that? That's today. All right. So hopefully that gives you some insight into how to look for ideas, how to read the charts. And there's obviously a lot more charts we can use to kind of fine tune our idea, but we'll talk about those later.